Well, I would argue that banks everywhere are pretty conservative. Whether you're talking about the US, you're talking about Europe, talking about here in Korea, tend to see a much slower adoption of cryptocurrency. And the reality is that all of these companies have a fiduciary responsibility to their clients to keep their assets and their investments safe. And you can't take on a new technology without a tremendous amount of diligence. So look, we're honored and flattered that we're able to work with an institution like Hana Bank, and they are ready to start figuring this out. It's an iterative process, right? And they need some expertise that we have, but we need some expertise that they have. And the goal here is to make it so that everyone can have safer access to digital assets, and that we can take digital assets into markets that, without hitting traditional finance, simply wouldn't be possible. Well, part of that is to be determined, right? So, look, we're taking a multifaceted approach as BitGo to how we address the global footprint of digital assets. We got started as a technology firm, and we were excited about the non-custodial component, the self-custody component. That's where we started. We held one key, and our clients would hold two keys, and that was a model where it was not custody. But as we grew and institutions needed more help, they wanted a fiduciary. So we became a fiduciary, and now we have 4 trust companies, around the world. Everything is about continuing to raise the bar as the values that we secure grow from $10 million wallets back in 2013 to $100 million wallets in 2015 to $1 billion wallets in 2017. You need to keep raising the bar. So how exactly it's going to unfold here in Korea? Well, we've got work to do, make sure that regulators are comfortable with the product that we're building a great product and service that fits the needs of local businesses here, and then, of course, trying to interface that to what's happening around the globe as well. Institutional investors is all we focus on. So early on, as a security company pioneering multi-signature, we quickly gravitated towards businesses, and the businesses then needed levels of control that we didn't have in the early days. The early days was about multiple keys on chain, but we had to add multiple user support, give people different roles. It looks a lot like a bank account. You go to a bank as a business and you sign up for an institutional account, and they will have a set of controls around who's the account owner, who can initiate transaction, who sets policies, who approves transactions. So we had to build all of that. That's what we've been doing for years, and then of course we've been growing the scale. So this is our area of focus. One of the things that we've seen as new use cases emerge in crypto is that everybody starts to run into questions about money. That is, once you've created digital property, and that digital property can exist on the internet, when you move it, you are now moving monetary value. So companies that traditionally, like Nike, were thinking, hey, can we make NFTs to help build brand loyalty? By way of having digital property, have created something of value, and now when they transmit it, they're wondering, wait a minute, does this intersect with banking law and payment law, etc.? So BitGo's been through this. The reason Nike likes us is A, the technology that we have affords them to be able to interface with NFTs in a bunch of creative ways. But second, they know that BitGo has taken the steps that are necessary in order to interface with financial products and monetary systems. And so we have that in place. So this is hard. Look, I think the number one thing you got to do is have a dialogue with the regulators. What's definitely happened in the last 18 months, amplified in the last 12 post-FTX, every regulator on the planet in every country is figuring out how to deal with digital assets and cryptocurrencies. And so they're all changing. The good news, they're mostly changing in the same types of ways, but they each go about it slightly differently. To some degree, it's almost an impossible job. We now have to think very carefully when we bring on a new client in a new jurisdiction, what does that mean to us? A few years ago, we were able to be a little bit less concerned about that, but now we have to look at it deeply. And then look, we try to interface with the regulators, make sure that they know exactly who we are and what we do. And our goal here in Korea, of course, is to start meeting the needs of the Korean regulators. That's an easy one. We talked about that quite a lot. So look, BitGo's behind the scenes. We do about 20% of all Bitcoin transactions by value. When you look at the other chains, there's Ethereum or Solana and others, we have significant volume on all of those. And I think this just goes to show, look, we have a lot of institutional clients and they use us behind the scenes, so a lot of things touch a BitGo wallet. Everyone should have concerns in the digital asset space, right? Like, this thing is growing, and it's growing the way software does. It can grow virally, where very quickly it can grow by a factor of 10. And we've seen that in our space already. So of course people should be concerned about that. Additionally, the whole point of what we're trying to do here is to decentralize. We're trying to make it so that we don't have to have complete dependence on just a small number of institutions. Now, on one hand, BitGo has a business, and of course we are looking to sign up clients, and we want clients to come to BitGo, and we want to do business. But at the same time, the way this industry evolves is to make sure that there's decentralization, where there's a plethora of participants, whether you're talking about custodians or banks or clearinghouses or prime brokers or whatever. So look, this is something that we're concerned about. I talked in my talk today about the importance of interoperability, HTTP and protocols, right? We're going to get to a point quickly where the digital asset ecosystem has to figure out how we all interoperate. The blockchain's part of it. That's a huge interop right there. But there's more to be done kind of at the higher levels. And once we figure that out, we'll be able to maintain both decentralization and yet also have, more centralized type parties like us are required when, a fiduciary or business is interacting with digital assets. Well, as I said in my talk earlier, we're thinking about global financial system. So I've used this analogy before. We have a global economy. The US, of course, does trade, imports and exports with China, with Korea, with India. Labor's, a lot of tech labor is out to India. In Mexico, a lot of things are produced. Every country has this pattern. But when it comes to just being able to interoperate the basics of money, every country has kind of got its own localized regime, and everybody's separate. And so we have bridges between the different countries of how money flows. Digital assets are going to break down these borders. So all of a sudden, instead of everybody being able to regulate just locally, we're also going to have to consider how to regulate globally. And this is something that the regulators haven't really had to think about until now. All of a sudden, software blows the doors open where money can be stored in ways it never could be stored before. And so these questions are emerging right now.